Hello everyone, the Chart Guys have been working on an introductory technical analysis course for quite some time now, and after surveying hundreds of traders with what would be the most sought after information regarding technical analysis, we came up with this course, When to Enter and Exit. It covers over 5 hours of the basics on when to enter and exit, and we feel after watching this course it will help build a foundation of technical analysis knowledge which will eliminate a lot of the uncertainty in the world of trading stocks. So the course outline, we go over the psychology of trading, establishing a game plan, the different indicators we use to signal a bullish and bearish entry, how to recognize support and resistance levels, poor entries, where traders make mistakes, exit targets, how do you know where to sell your trade, where to place stop losses, that's very important, minimizing losses is what keeps you in the game long term, my personal preparations, how I go about getting ready for each trading day, and then piecing it all together, utilizing all the information we just learned and how to apply that in the real world for making successful, profitable trades. As a bonus, we also include a lot of information on finding entries and exits utilizing patterns, and you can find these patterns on every time frame on pretty much any stock and commodity trading, and certainly being able to recognize those patterns can give you an edge as well. So we hope you will check this out. Again, it's an introductory level course. So if you are new to technical analysis and trying to get a firm grasp on things and feeling a little bit overwhelmed, then this course is for you. I hope you check it out. Appreciate you watching. Hey there, gold friends. Looking at the dollar on the hourly time frame. So gold and the dollar were both weak yesterday, and gold was weak when the dollar was weak, in my opinion, due to the overall market being strong. So now we're seeing the dollar turn things around. We're breaking the lower high pattern on the hourly. We have a new support established at 133, and resistance is up at 165. But it all comes down to the daily time frame, where we are still rejecting from the 10-day moving average resistance, still maintaining higher lows because we found support so far at this point above 99.43. So we do still have the higher low pattern on the daily. The 10-day moving average resistance, we have 1, 2, 3, 4, 5, 6 rejections. And the bullish MACD cross, we're going to have to see confirmation of the bullish reversal candlestick and a close above the 10-day moving average. So you can see the dollar is a bit of a laggard, whereas gold closed below the 10-day moving average, confirmed the bearish reversal candlestick, and if gold and the dollar were directly inverse correlated, we would see this 10-day moving average and confirmation have already taken place. But that is not the case. So we're watching tomorrow, another green day, and the bulls are going to be looking to resume this uptrend after forming another higher low. So it's a pretty important day tomorrow for the dollar bulls. We want to see follow through, and the next resistance we'll be looking at after 101 psychological will be 101.73, this little bounce attempt that rejected. So what does that mean for gold? Gold is still weak. Hourly time frame is nowhere near changing this trend. Still lower highs. I've got a downtrend resistance to be watching, but it's really going to require gold back over 1200 to prove anything in the short term. Otherwise, we're just going to be looking for oversold bounces for these RSI levels to get above the under 30 mark where they are oversold. So daily time frame for the dollar, or for gold, we got our bearish reversal confirmation for the first time on this entire bounce yesterday, and now we're seeing follow through to the downside. In that same day, we lost the 10-day moving average support, which was our bullish signal. That was now a bearish signal, and it's beginning to descend. So this 10-day moving average is now going to be a key resistance again, and I probably wouldn't be going bullish personally on gold until this 10-day moving average were back as support. So the next couple of days, that's going to begin to drop. It's currently at 1204.77, and it's going to be heading down towards 1200 again. And the bulls, we're just waiting for a bullish reversal candlestick on the daily time frame to show us potentially that a new higher low has formed. So 1177.08 support stands out, the low of this consolidation day. We're now below where we were from that initial fake out, I should say, the bearish reversal inverted hammer that I was thinking was going to be the temporary top. Saw some further upside, but now we're back down below that level, trying to hold that support of 1187.71. But we're on the verge of a bearish MACD cross, and I don't expect to just dump. I don't expect to fall off a cliff here, but we could see a little bounce, a lower high, a lower low. We're going to have to be patient here and watch to see when solid support is established, and this 10-day moving average is going to be our guide again. It was the bull signal, potential bear signal, and now we're going to see if it's going to be a bull signal again while we patiently wait for the bulls to establish a higher low. So what does this mean on the weekly time frame? The longer term outlook, this bounce was just straight up. We didn't establish any support on the way up on the weekly time frame. Last time we did that, it led to an all-out dump. So the bulls need to form a higher low and then a higher high to be confident in any kind of trend change, because the bears have been in control of the trend now for about 6 months. So if we can see a higher low and then a higher high, we're going to be looking up at this downtrend resistance line, and then we'll be looking for some progress. But in these videos, if you've been watching them, I keep saying that we can't trust that this move is anything more than an oversold bounce until we form higher lows and then higher highs. This just straight up bounce is great for quick gains, but it doesn't do anything in terms of giving confidence in a potential trend change. So that's what we're going to be watching on gold into tomorrow. Let's check in on our miner friends, GDX. GDX, we lost the 8-period exponential moving average support. We lost the 100-day moving average support. And we're looking at the middle Bollinger Band support, which is 2258 and ascending. Now, that's enough signal for me to get out if I were a bull, but we are still holding higher lows. We have our 2190, 2215, 2255, and now 2278. If we break 2255, we break this higher low pattern. That would be a big red flag for the short-term bulls. Weekly time frame is a clear bearish reversal inverted hammer, rejecting from the 50-week moving average resistance, and currently we're down near the low of the week. A red week next week will confirm that, and we'll be looking to pull back again, just like gold. We need a higher low and then a higher high to have any confidence in a trend change, because every bounce attempt has not formed anything resembling a higher low. It's just been a bounce attempt and then a dump, bounce attempt, dump. Tons of bear flags. Let's check GDXJ and these junior miners. Same story, losing the exponential moving average support, but still maintaining higher lows. And the higher lows I'm looking at 3550, 3571, and now 3608. On the verge of a bearish MACD cross. If we lose the middle Bollinger Band and break 3571 support, we lose the higher low pattern. It's a bearish reversal candlestick on the weekly time frame. 50-week moving average has held back tests 2 weeks in a row. That's at 3616, and if we close below that level tomorrow, it's going to look like we're heading to further downside. So the bears are in control of gold. The miners are still barely clinging on to higher lows. And just comparing Dust and JDST as to which is in a better position, you can see Dust has gotten its exponential moving average as support, on the verge of a bullish MACD cross, on the verge of a bullish TCG cross with these 8-period and 4-period exponential moving averages. Resistance is 3672, and we look at JDST, it's stronger in my opinion. And we already have that bullish MACD cross right about to form. We've got resistance at 2181, or 2185 I should say, and we are approaching that level. So I would give the slight edge to JDST, and if you look on the shorter term time frames, it's a bit more clear. This morning someone asked me what's more bullish, JDST or Dust, and the answer was JDST, because it had all hourly moving averages as support when Dust still had the 200-hour moving average as resistance. So just those little subtle differences allow you to be able to see which you would rather be playing by zooming in and getting as much detail as possible. So let's see if the bulls can mount an oversold bounce here on these bear miners with the bullish MACD cross, looking for bullish TCG cross, and the exponential, or I should say the middle Bollinger Band resistances will be a key level heading into early next week as well. So I appreciate you watching. We will check back in tomorrow and see how it all plays out. Again, there's no rush to get back into gold. We need to see confidence that we have a higher low. And for me personally, as the 10-day moving average has been a really nice guide so far, I'd let that be my guide from here on out and use it again. That level needs to become support. I appreciate you watching. See you tomorrow. Have the most exciting night. It's gonna be great. Just wait. Something incredible is gonna happen.